Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
Dodge, a very good morning to you and Happy New Year. Now, of course, 2016, new year, new opportunities, new challenges, all kinds of stuff to consider. China, oil, of course, the US economy, the Federal Reserve. What are your views on the opportunities and challenges that lie ahead?
Well, good morning and a very happy and healthy new year to you as well. Challenges are going to be more asking questions with a negative bent and coming up with positive answers. You mentioned oil. That's going to be a big one for us. I think that's going to be a market mover. First of all, it's somewhat negative in the beginning, but we can talk about it later. It does look like there's a possibility that, given what Saudi Arabia is doing, that perhaps the supply of oil will start to go down, and that will allow prices to increase. So that may be a real mover for the market, more likely in the second half and the third quarter than it is now. China is going to be a big question. The question is, can it transition itself to a more consumer-based economy? And they're going to have to answer that question. We're watching their credit growth. We're watching the currency. Of course, there is a question of whether there will be a devaluation. We suspect there will be. But it's not going to be as positive as the Chinese would hope for its economy. So there's a lot going on, and one's going to have to be on their toes. Again, the questions that are being asked now are of a more negative bent, and what we're watching for are the positive answers.
Dodge, in terms of oil and oil's direction, you mentioned Saudi Arabia's direction. Of course, overnight, we have seen tensions between the Saudis and the Iranians escalate considerably with the executions and the rejection of the embassies and trade relations between political relations between the two countries. How do you think that will affect prices in at least the very short term?
In the very short term, it's going to be more. It will be definitely more volatile with a more negative bent, I suspect. But again, we're talking short term. The implications of what you're talking about are much more politically oriented than particularly the price of oil. So we suspect oil will continue to be a commodity-based asset, which will be subject to commodity-based fluctuations both ways. But again, the questions, the answers that we're giving you right now are much more negative in nature given what's been happening over the last couple of days.
You'd mentioned that you think that what Saudi are doing, quote unquote, prices might creep upwards in the second half. What did you mean by that, Dodge?
Well, you have to kind of sit back and think about this. They keep the prices down, yes. So that means the producers of higher priced oil or oil substitutes, shale, for example, over here, they have, first of all, the shale people are not going to want to continue. They will drop out or at least drop back. Then you have the oil producers who are going to be closing their sources of oil that are more expensive than what they're getting because it just makes sense. But if you shut down oil producing rigs, etc., that costs millions of dollars to A, shut down, and then B, to start up again. So once they shut that down, it's not going to come back terribly quickly. And so, and we're already beginning to see a reduction in oil rig production. So this is in the process now. Shale will be the next to step back. Now, at some point, and the Saudis have the capability, the wherewithal, they've proven it in the past, but now they're telegraphing that they're willing to take the time it takes to get to keep their production going up, to keep the oil price down to the point where their competition is no longer economically feasible. So I suspect that at some point now, it may not be until the end of next year or maybe 2017, we'll see the opportunity for oil prices to go up only because supply has crept down, and to bring that supply back up will cost more than the economic viability. So that's really what I'm thinking about at this point.
Dodge, oil is just one of the three big global macro themes for 2016 and ahead. The Chinese economy and the yuan's direction is the second one. From the standpoint of opportunities for investors, do you think there are opportunities for investors in 2016 given China's ongoing push towards a more consumption-led economy?
Yes, I do. One just has to be careful. It would be very hard to name what the opportunities are, but you can't step away from it. China has, if it can get its act together and become much more focused on the consumer side of its economy and how it spends its reserves, I do think that China will have some real opportunities. Their stock markets are very volatile, and one has to be careful with how one does the investing, but one has to continue to watch. In the United States, I do see some opportunities, but more in the high-yield area. I suspect that we're going to see high yield, particularly in dividend-yielding stocks. Those will be the ones that will benefit from the concern that we have for the short term, at least for the first 6 months.
Well, many widely expect the yuan to depreciate even further in 2016. What do you think that's going to have an impact in terms of emerging markets such as ourselves in Malaysia and ASEAN from an ongoing yuan devaluation? How big of a risk is it?
It's a big risk. It could trigger competitive devaluations, particularly with other emerging market lands, yourselves included, and that we've seen that in the past. It's a beggar thy neighbor, and it's a free for all. So that and that will be counterproductive to what the yuan, what China's trying to do. China ultimately would have to pay more in yuan terms for imported raw materials and components, and that, of course, would cancel out many of the benefits of their effort to increase their exports. So it is a risk, and we will have to watch it. We've gone through this before, and it hasn't turned out well for anybody. So I suspect that this time around that the risk will be more than the fact, and it may not actually occur, or it will be delayed to at some point later on in the year.
Well, the third and final theme in the Global Stock Watch, of course, is the U.S. economy. And it is 2016, the year of the U.S. elections. Dodge, what are your views, very quickly, in terms of the candidates, and who will be the best to from a business perspective?
Very hard. The elections are going to take much more importance than they should. You have Hillary Clinton on one side. You have a Republican candidate who that will be, at this point, is not certain. It's going to be very hard for the Republicans to get their act together and come behind. But someone like Trump seems to get the interest of across both Republicans and Democrats. And although he may not be the best candidate, he may not last, perhaps someone like him who is willing to talk out and be free with his opinion or her opinion will be the answer. But at this point, it's not clear that that's going to happen. And the economy is going through some questions now. If you, as you saw with the economic indicators that came out last week, the questions that are being asked still are negative. Yes, we're on a better footing. Yes, interest rates are beginning to increase, or at least to stable. On the look is to the upside as opposed to being staying at zero. So we are making progress, but it's not fast progress. It's going to take longer than expected. I suspect that 2016 at the most will be a conversion from where we were to what we'll be in 2017, and that's about all. Now, the economy itself can withstand some of the economic risks that we have, yes, and we are on the right track, but we're not moving fast, and we're going to be very dependent on what happens in China and the rest of the world.
Well, exactly, Dodge. The rest of the world seems to have a jury out in terms of the health of the U.S. economy. You talked about perhaps some trepidation where the health of the U.S. economy is. How is that going to affect the direction of the Federal Reserve's rate hike timetable?
They've made the biggest move. That's done. I suspect that there will not be another increase until June. And then it will be measured steps, and we'll be very prepared. I think that the Fed, Yellen, has been very clear and has been good at communicating what is happening. But I suspect there may be 2 increases next year, the first being in June. And then if that works, and if we are still on a steady-as-you-go basis, and we're beginning to look more positive than we are now, then yes, there may be more than just 2. Then I suspect that each month that goes by, there will be the question, and for most of the months that go by, the question will be next month. But at least we're in the right direction at that point.
Dodgers have a thank you and Happy New Year. That was DodgeDorland, the Chief Investment Officer of the Landor&Fuse Capital Managers in New York City, BFM 89.9.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, 1 subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last.